Broadcom is the invisible backbone of the digital age, with over 99% of internet traffic traveling through at least one of their chips. Their semiconductor infrastructure powers the carrier networks transmitting signals across towns, the broadband modems bringing internet service from these networks to your home, and the Wi-Fi routers wirelessly distributing the modem's signal to your devices. While their core legacy business remains stable, Broadcom has yet to experience the most lucrative growth phases of their rapidly scaling AI semiconductor division, giving investors a new major opportunity to capitalize on. Their application-specific integrated circuits, or ASICs, are customized to be highly cost-effective for specific AI workloads, unlike flexible yet expensive Nvidia GPUs. For investors seeking reliability and growth, Broadcom represents a highly compelling case. Nvidia manufactures general-purpose GPUs, which offer significant flexibility in terms of the calculations and workloads they can handle. However, Broadcom takes a unique approach in designing their silicon chips. They trade this flexibility for extreme cost-effectiveness in handling a specific task. Neither GPUs nor Broadcom's ASICs will replace one another due to their unique advantages. ASICs can maximize the efficiency of a company's current operations, while GPUs are far superior in terms of research, heterogeneous workflows, and adaptability to new types of calculations. This makes the former better for AI inference, a fixed task which involves the operating of a model, and the latter better for AI training, which is a fundamentally different process from AI inference. Currently, Nvidia has a much stronger appeal to non-hyperscalers by delivering ready-to-use hardware and a proprietary software platform that supplements it. Meanwhile, Broadcom requires clients to provide specific architectural designs for their custom chip development. The process of developing a custom accelerator can cost up to hundreds of millions of dollars, as it involves paying for research and development expenses along with engineer salaries. And because regular companies won't use massive volumes of chips like hyperscalers, the massive upfront costs of custom chip development often overshadow its positive impacts on cost effectiveness for their businesses. However, Broadcom can still design a custom chip with a hyperscaler that becomes a commercial alternative to Nvidia GPUs for regular enterprises. In fact, they may have already done this. Broadcom's partnership with Google served as a game changer because it cemented their status as a reliable chip maker. Together, the two companies designed the tensor processing unit, which solely consists of matrix multiplication units. Matrix multiplication currently serves as the standard calculation used to run AI models. This makes the TPU not just more efficient for operating Google's Gemini, but for running any AI chatbot. Although it can only be rented through Google Cloud, Meta is currently in talks with Google to buy their TPUs, which could potentially start the chip's journey as a commercial alternative to Nvidia GPUs. Broadcom has already demonstrated exceptional growth in their AI business, but now they are experiencing the additions of new hyperscaler clients to their customer base. Alongside Google and Meta platforms, Broadcom is entering active partnerships with multi-billion-dollar rivals OpenAI and Anthropic. This is extremely crucial because it means Broadcom has much more room to grow, and we have visibility into that future growth. Google and Meta are investing a combined total of over $300 billion in capital expenditures, while OpenAI and Anthropic have raised funding rounds of $110 billion and $30 billion respectively. These hyperscalers have the capacity to spend, they're spending more than ever, and Broadcom is at the heart of all of this spending. Broadcom's semiconductor business is highly stable and diversified beyond AI chips. They design multiple components of the iPhone. They manufacture Wi-Fi chips and FBAR filters, which help your iPhone find 5G signals transmitting your data and manage to work efficiently in crowded locations without excess battery usage. Broadcom's semiconductor products also power broadband modems and carrier routers, with the former bringing internet service to your house and the latter transporting internet data across different locations. In addition, Broadcom has acquired multiple major designers of enterprise software solutions. Their largest acquisition, VMware, is a leading provider of hypervisors, with their main model being the VMware Cloud Foundation. A hypervisor basically lets a computer run multiple operating systems through partitioning its hardware into different segments, creating multiple virtual machines. This is highly attractive to larger enterprises prioritizing maximum resource utility, and it has other benefits such as the ability to save each virtual machine's files to facilitate disaster recovery. And now, these hypervisor capabilities can be applied to Nvidia's cutting-edge Blackwell and Rubin GPUs as part of Broadcom's and Nvidia's new VMware partnership. Broadcom generated $35.8 billion of revenue in 2023, $51.6 billion in 2024, and $63.9 billion in 2025. The portion of Broadcom's revenue coming from their AI semiconductor business increased from 23.6% in fiscal year 2024 to 31.3% in fiscal year 2025 to 43.5% in quarter one of fiscal year 2026. According to Broadcom's guidance, this percentage will increase again to 48.6% in the next quarter. CEO Hock Tan stated that Broadcom's AI revenue could hit $100 billion in fiscal year 2027. This would represent a tremendous level of growth, but it's backed by new revenue streams, including the cash-burning monster OpenAI. Based on this estimate along with the aforementioned data, I predict that Broadcom will generate $45 billion in AI revenue in 2026. Broadcom experiences bursts in non-AI semiconductor revenue near the end of the year due to the yearly release cycle of Apple iPhones. Additionally, the release of Nvidia's Rubin chips may trigger a slight acceleration in VMware sales growth. Other than this, non-AI revenue has remained flat as its primary sources are well-established, albeit matured businesses. I think that Broadcom will generate roughly $50 billion in non-AI revenue, meaning that my revenue estimate for the full fiscal year of 2026 is $95 billion. It's important to note that there is a massive difference in GAAP and non-GAAP earnings, which is the result of aggressive stock-based compensation and the integration of VMware's pricey acquisition into Broadcom's financial statements. Currently, at a stock price of $320, their non-GAAP and GAAP price-to-earning ratios are 44.1 and 65.5 respectively. But because non-GAAP measures serve as a better indicator of core operational performance, I will choose to use them going forward. Broadcom's non-GAAP net margins have stabilized near 50% over the last 2 fiscal years. Projecting this forward, Broadcom is positioned to deliver approximately $47.5 billion in net income for 2026, translating to an EPS of $9.71. If their stock maintains a multiple of 45 times earnings, it would represent a 37% price increase to $437. If it goes back to a PE of 50, like it did following the trend of big tech buyback in 2025, the price target shifts to $485, representing a potential 52% surge by year-end. I'm more inclined to believe the first prediction over the second. Broadcom's 2025 rally was so large because it started from a lower PE level, and 2025 was arguably the year when Broadcom solidified its status as a formidable opponent to Nvidia. All of the major contracts Broadcom has landed are over a 2 to 4 year time frame, so in 2026, their AI semiconductor business will likely continue to grow at a rapid pace, but not hit its peak. Until their custom silicon business experiences its next level up, so to speak, I don't think Broadcom's stock will experience a rally as big as its 2025 one. Of course, if Broadcom can fulfill the contracts they've secured, their revenue will explode, hence why I believe the stock will maintain a premium. Of all the customers Broadcom received in 2025, OpenAI is the largest one. If Broadcom develops and deploys 10 gigawatts of OpenAI custom chips by 2029, which would fulfill the terms of their contract, they could generate over $300 billion in revenue. However, OpenAI is also the focal point of investor fears relating to the risk of an AI bubble. I believe that OpenAI will need at least 1 to 2 years of consistent earnings performance to resolve these doubts. Therefore, rather than getting immediately excited, I believe that investors will wait to see if Broadcom stays on track to fulfill its contract and if OpenAI stays on track to reach profitability by their target year. Nonetheless, I still believe that Broadcom will crush the broader market in 2025. In this video, along with my Nvidia episode, I emphasized the point that Nvidia is better positioned to maintain its status as the overall chip leader in 2026. But for Broadcom, it's not about overtaking Nvidia. It's about clawing away at Nvidia's market share and still having yet to experience its most rapid growth phases. Know that my predictions are subject to change as we see Broadcom's financial performance in upcoming quarters, along with new trends among the overall market. You can expect an updated version of this video when the next big company-related news comes out. Leave a like on this video if you enjoyed it, and subscribe to the channel if you want to see evaluations on more stocks in the future. I hope to see you in my next video. Thank you for watching.